you've ever found yourself stuck in the debate between Bitcoin and gold, wondering which one actually protects your wealth, then this video is going to feel like someone finally turning the lights on. Today, we're diving into one of the biggest ideological battles in modern finance, CZ, the champion of Bitcoin, versus Peter Schiff, the relentless defender of gold. And trust me, if you think one of them is obviously right, just wait until we get deeper into this, because there's a surprising point, one they both secretly agree on, that most people completely miss. And if you're the type of person who's ever argued crypto versus gold even once, go ahead and hit that like button so we know we're talking to the right crowd. Now here's what we're getting into today. We're going to break down CZ's vision for Bitcoin, Peter Schiff's unwavering case for gold, the core differences between the two assets, the risks on both sides, the surprising overlap nobody talks about, and most importantly, what this debate really means for us as investors. Our goal isn't to pick a side blindly, but to understand the deeper logic that drives this clash. Because if we understand that, we understand where money is actually moving. So let's start by setting the stage, because this debate isn't just two guys shouting on Twitter, it's two philosophies colliding. On one side, we have CZ, someone who helped shape the entire cryptocurrency landscape. Whether people love him or criticize him, the influence he had on global crypto adoption is undeniable, from building Binance into the world's largest exchange to pushing the idea that money should move globally, instantly, and without permission. CZ represents a future that's digital, borderless, and decentralized. On the other side, we have Peter Schiff, a man who's practically synonymous with gold and traditional economics. Schiff comes from decades of macroeconomic experience, Austrian economic theory, and a long history of warning about inflation, debt, and currency collapse. He believes gold is the one real, proven store of value, something that survived wars, empires, and financial crises. For Schiff, Bitcoin isn't just risky, it's a bubble built on speculation, not fundamentals. So when these two worlds collide, we're not just watching an argument, we're watching a fundamental disagreement about what money even is. Let's dive into CZ's side first, because whether we hold Bitcoin or not, we can't ignore how he thinks. CZ believes Bitcoin is the most efficient form of money humanity has ever created. His argument starts with scarcity. Bitcoin's supply is fixed at 21 million, and halvings keep tightening that supply for decades. Then there's portability. We can move millions of dollars worth of Bitcoin across the world in minutes, something gold simply cannot match. And, when we think about trying to carry even one bar of gold across a border, it becomes obvious pretty fast why this point matters. CZ also sees Bitcoin as future-proof, not because everyone will use it as daily spending money, but because institutions, governments, and large investors will keep adopting it as a long-term asset. He believes we're watching the early stages of a shift where digital assets become the new global standard. And here's where things get interesting. CZ often frames Bitcoin not as something that replaces gold, but as something that does what gold can't do in a digital world. But here's the part we need to pay attention to. There's a big risk behind CZ's vision that he rarely emphasizes, and we'll get into that shortly, because it changes the entire conversation. Before we get there, let's switch sides and look at Peter Schiff, someone who's been warning about the collapse of fiat currencies for years. Schiff's core argument revolves around one idea. Gold is money because gold has always been money. It's not dependent on electricity, networks, or software. It doesn't need a blockchain. It doesn't rely on adoption curves. It's physical, it's scarce, and it's universally recognized as valuable across every culture in history. And whether we agree with Schiff or not, we have to admit, there's power behind something that survived for thousands of years. Schiff sees Bitcoin as speculation, a digital token whose value comes only from demand, not from utility or intrinsic worth. To him, Bitcoin isn't a hedge, it's a bubble that will eventually unwind. His warning resonates especially with older, more traditional investors who grew up in an economic world where gold was the ultimate insurance policy. Now, we've laid out their positions, but the real clarity comes when we put Bitcoin and gold side by side and look at their core differences. Bitcoin is digital scarcity. Gold is physical scarcity. Bitcoin is infinitely divisible. Gold becomes impractical at small scales. Bitcoin is portable everywhere in seconds. Gold is difficult to move, store, or verify. But gold has physical tangibility. Bitcoin depends on digital infrastructure. Gold has 5,000 years of trust. Bitcoin has 16 years of exponential adoption. Younger investors look at Bitcoin and see opportunity, speed, and innovation. Older investors look at gold and see stability, history, and security. And neither side is wrong. They're just anchoring on different time frames and experiences. But here's the twist. Remember that surprising point we teased earlier? Here it is. Bitcoin and gold actually rise during the same global events. Moments when trust in governments, banks, or currencies weakens. When inflation spikes, when debt is out of control, when markets panic, both assets tend to benefit. Gold thrives when uncertainty grows. Bitcoin thrives when the financial system looks fragile or outdated. They're not opposites. They're parallel responses to the same problem, the world losing trust in fiat. This overlap changes the entire debate because it shows the real question isn't Bitcoin or gold, but rather, which form of scarcity do we believe will dominate the future? Physical scarcity or digital scarcity? Now, let's talk about the risks, because both sides have them. On the Bitcoin side, we have regulatory pressure, extreme volatility, and reliance on technology. If governments tighten controls, if exchanges collapse, or if network stability becomes an issue, Bitcoin faces challenges. And volatility itself can be brutal. Watching Bitcoin swing 20% in a week isn't exactly comforting for someone planning retirement. On the gold side, the risks aren't talked about as much, but they're real. Gold is slow to move. It's expensive to store securely. It's hard to use in modern payments or fast-moving markets. And in a digital-first global economy, physical assets trade slower than digital ones. Gold protects wealth, but it doesn't accelerate it. And this brings us to the part that matters most. What this debate means for us. When we zoom out, what we're really watching is the past and future of money negotiating their coexistence. And as investors, we don't have to choose a side based on ideology. What smart money is doing right now is simple. They're allocating to both. They use gold for stability and Bitcoin for asymmetric upside. They understand gold as an anchor and Bitcoin as a rocket. And a smart portfolio can hold both without contradiction. Because at the end of the day, this isn't CZ versus shift. It's innovation versus history, speed versus certainty, digital scarcity versus physical scarcity. And we benefit most when we understand both. So as we close this out, here's the truth. This debate is only going to get louder as the global economy becomes more unstable. And if you believe this conversation is far from over, go ahead and hit that like button, because we're just getting started. And make sure you subscribe if you want us to break down the next big clash the moment it happens.